Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Patrick Gadson, partner and co-chair of Shareholder Activism Practice at Vinson and Elkins. Vinson and Elkins Shareholder Activism Practice was awarded a #1 ranking by Refinitiv for company and board representation for full year rankings, credited with advising on 41 campaigns. This is the 5th consecutive year that Refinitiv has awarded V&E Shareholder Activism Practice a top ranking. Patrick, welcome to Trade Talks and congratulations on the wonderful news.
Thank you. Thank you. Happy to be here. A little unexpected that we were able to do it 5 years in a row, but we're pleased about it.
And we're glad to have you here with us. Give our audience an overview of the activism practice at Vinson and Elkins.
Sure. So we are a practice that specializes in activism defense, right? So we traditionally represent public companies that are faced with activism from one of or many of their investors, their shareholders, and we help them sort of navigate what could be a pretty prickly thorn bush, and we help them get through it and hopefully reach constructive solutions to pretty complex problems.
What are some activism trends that you're watching for 2021?
What we're seeing now that we haven't seen probably maybe ever is a more sophisticated group of institutional investors that are very accustomed to activism, right? Who play a very significant role in activism because they vote, right? And so what we're seeing now are, a generation of institutional investors for whom activism is not new, right? 10, 15 years ago, it was sort of on the cutting edge and people were really wondering, is it just private equity in the public markets or is it different? But now that it's been sort of a more entrenched asset class, we're dealing with a very sophisticated base, right, of shareholders and even some very sophisticated retail holders who can understand campaigns, who know when they should or shouldn't listen to an agitated investor, who can understand, okay, this investor's short-term, this investor's long-term, they do or they don't have an alignment with my particular needs and goals as a either institutional or retail investor. So you're dealing with something that's very, very different, but it's come a long way in terms of the maturation along with the asset class. And we're still dealing with the ramifications of COVID, right? And whether or not activists are going to be able to successfully run campaigns against companies who may be dealing with significant macro stress, things they have no control over. And is this about their performance prior to COVID? Right? Is this about their performance relative to their peers during COVID, or is this about the future, right? Each of those is a different bucket of arguments that activists are toying with using here and there in several campaigns. And we'll see if they being those arguments resonate with shareholders this proxy season. We're just at the beginning. So we'll see if those work. But there's also this feeling of, okay, there's a lot of uncertainty. We aren't really sure when things will be back to quote unquote normal, or at least normalized to the extent that demand for many goods and services that is sort of sapped because of COVID, it becomes more robust and does go back to a normal trend pre-COVID, right? So we're waiting to see on that, and a lot of shareholders and activists are waiting as well, right? You could have a great thesis, but if you're dealing with a company that's consumer facing and consumers just don't feel comfortable leaving their homes, well, then they aren't going to feel comfortable buying sneakers that they would really love to show off after they leave their house, right? They're just not going to do that, right? So there's a lot of different aspects and components of COVID that affect the demand side for goods and services that activists are wondering, okay, can we critique or should we wait a while?
And Patrick, were there any trends that were accelerated as a result of the COVID-19 pandemic, or is this just really a new landscape in general?
No, I do think there were some trends that accelerated, right? The extended supply chain sort of reevaluation for a lot of companies that activists have been critical of being, you need to be more efficient, you need to prepare your supply chains for extreme stress. Those have had to accelerate, right? So many companies have found that, one good thing about COVID is that it gave them an opportunity to make a lot of changes. We won't call them full-on restructurings, but we will call them sort of operational nuanced changes internally that, will or would otherwise sort of affect their income statement, right? Maybe negatively, but when your income statement is in a lot of disrepair because your top line has been smashed by a COVID brick, then you have more flexibility to make those other changes, right? So sort of an acceleration of internal changes that needed to happen anyway. We've seen a lot of that because usually many of my clients they don't necessarily complain about being assessed quarter to quarter and short-term thinking of many shareholders, but they do appreciate sort of shareholders being forced to take a more sort of year to 5-year evaluation of how a company's doing, as opposed to quarter to quarter, because with the uncertainty that there is now, it's difficult to understand, especially post GameStop. All right, what's the signal? What's the noise? Are activists going to really want to dive in there when it may be difficult for them to determine what the signal and noise is? And so, let's, as a management team and as a board, let's use this time efficiently, because we're going to be given a lot more leeway and flexibility in terms of performance than we would outside of having to deal with the pandemic.
And finally, do you expect any changes to come out of the SEC and Biden administration that could impact the path of activists?
Yes, specifically with activists that are pushing for, that have a history of having pushed for M&A, right? So if big XYZ Acme Corp, you want them to merge with also big ABC Acme Corp, we're dealing with an administration that's clearly going to be a lot more robust in how it thinks about antitrust, right? And those sorts of complications, right? And so many activists that are, consistently pushing for M&A may find that they need to take a step back and wonder, is this target too big to sort of try to force a transaction on, right? Will the transaction even relatively come close to clearing this new sort of FTC's regime, its litmus test of what's appropriate, or is this something that universally, whether it be sort of our domestic antitrust regulators or sort of foreign competitive regulators, are they just going to say, no, it's not going to work. We don't really like this transaction, right? So it's more for the really large players, right, that want to move really large companies into the hands of other really large companies. But otherwise, we don't expect the SEC to be extraordinarily sort of toothed in how it deals with activists. For the most part, the SEC, Exchange Act regime is a regime that's there to help shareholders, right? It's a disclosure-based regime, right? It's there to say, okay, shareholders otherwise would know nothing. Companies would be black boxes. So here are a set of rules and regulations that force companies to disclose things that maybe they otherwise wouldn't, or historically they didn't prior to the 20s, right? So we aren't, likely to see that much change in terms of how the SEC or other sort of federal regulators look at activists, but certainly in terms of the outward-looking theses of activists that are looking to push big companies into the hands of other big companies.
All right, Patrick, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.